Hello everybody. So this video is entitled Cybersecurity Best Stocks ? And that is a big question mark because I commented back yesterday in the comment section. Somebody told me, what do you think of cybersecurity stock? I did say that I like SentinelOne, and I'm going to take that back. I don't like SentinelOne. In fact, I don't like any of these. I am concerned by these. I find them very expensive. The market has somehow, figured out the belief that cybersecurity is paramount, and it absolutely is paramount. But because of that belief, it has granted them absolute nosebleed valuation that I must say I really don't understand. I just don't get it. Back in the early days of the channel, when I used to cover these stocks, they used to be much cheaper. They've been on a tear, they've been on a run, and even though most of them have corrected, of course, since October of 2025, since the big crash, you will find that they've corrected very little, like down 23%, down 28%. That's not a big correction when you look at, many companies being down 70%, who have much better numbers, much better numbers than any of these, down 70%. So in many ways, these have not corrected nearly as much as the other companies. For frankly companies that I don't find them attractively priced. So let's go through them. CrowdStrike. So CrowdStrike, of course, is the darling of cybersecurity. It is well embedded into most enterprises. We realized, of course, how embedded CrowdStrike is whenever there was that outage. Was it a year and a half or 2 years ago? You may remember Delta sued them for losing a bunch of money, etc. Well, they recovered, but they recovered like crazy to a point that EV over GP over RG is 1.22. So very expensive. Rule of 40 is a 20, so you don't achieve rule of 40. EBITDA margin is still negative at minus 2%, and the company is predicted to grow 22% next 12 months. That's not fast enough for me. So I don't understand CrowdStrike. It's to me, it's a very expensive company. 16 times revenue. I find it very expensive, and I understand that CrowdStrike has a network effect, and the network effect really protects them a lot against any form of AI disruption, because CrowdStrike is about, you detect a breach somewhere on the network, then you can upgrade the software and fix that breach for anybody who has the Falcon software. So therefore, everybody is wanting to have that software. I get the moat. I understand why it has a moat. But the valuation is just nuts to me, so I don't understand it. Rubrik, same story. So Rubrik is a stock that had a lot of hype a little while back. Rubrik is what? It's data security. They focus on zero trust data management, data security, focus on fighting ransomware, fighting people deleting the data, all of that sort of stuff. I would love to study more what the company does, but I'm not going to invest time and energy study more what this company does when I have nosebleed valuations like that. I guess this one is not that expensive at EV over GP over RG of 0.32. That's kind of cheap. But the rule of 40 is a 7 because the EBITDA margin is way negative, minus 24% EBITDA margin. This one grows fast, 31%. So this one, doesn't look too bad as far as the numbers go. But they're losing a bunch of money at minus 24% adjusted EBITDA. And I've really kind of evolved in my investing, and now I get a little picky, right? I want a rule of 40. Or at least very close to a rule of 40. Like, I don't have that with Rubrik. So no, it's a little too early for me. Same for SentinelOne. SentinelOne it's losing 37%. EBITDA margin is negative 37%, and it's only growing at 20%. Again, I do not get these numbers. Yeah, it looks cheap on an EV over GP over RG. It looks cheap, 0.26. But it doesn't achieve the rule of 40. I now try to have both rule of 40 and a cheap EV over GP over RG. Palo Alto Network. Palo Alto Network is perhaps out of this entire list, perhaps the least objectionable stock out of this entire list, but it is also very expensive at a 0.93, right? If you look at NVIDIA is something like a 0.45. So I would much rather own NVIDIA, and it has above 100 on Rule of 40, and it has an EV over GP over RG of 0.45. Like, I prefer Microsoft over Palo Alto Network. I prefer NVIDIA over Palo Alto Network. I prefer Meta over Palo Alto Network. So I guess that, yes, this is one of the lesser objectionable ones out here, and that's thankfully to the EBITDA margin of 16%. This is an established company, Palo Alto Network. They have some hardware. They have a few good things going for them. But I don't understand. I find it just too expensive. Now, Cloudflare, right? Cloudflare, they I call them VPN for websites, right? They obfuscate the IP of the server of a website. They protect websites against attacks. Wonderful business for sure, but valuation is nosebleed. And Cloudflare has been one of these high flyer stocks for the longest time, and it keeps being high flyer, and it has caught on a new narrative now saying that it's going to be used with AI agents a lot, protecting AI agents from attacks, protecting all sorts of websites from attacks. Yeah, and they have a very nice distributed network. It's DNS protection. Sure, the moat is there. I don't deny that these companies have a moat, and it's a very durable moat. But I don't want to pay 26 times revenue. That's way too expensive, right? Zscaler. Oh, I forgot to put the chart of Zscaler, but Zscaler is going to be the same story. So Zscaler is zero trust environment for companies. Zero trust access management, data management. A lot of big companies use it. But again, EV over GP over RG is 0.41. So, this is not very, very, very cheap. I mean, it's cheap. It's cheaper at 0.5, but not very cheap. And my main problem, the rule of 40 is not there either at 20. And the last one, and this is clear, right? And I had covered this one when it was, I think, $18 or something like that a while back. I found that I used to find it somewhat attractive, and I will tell you that, still on the numbers, rule of 40 is almost there, 0.68 is expensive. The numbers look okay, right? Just okay. Only growing 16%. That's too small for me. But Clear Secure is clearly trading on narrative. Like, this is absolute nonsense. Why do I say that? Like, do we have people who are bidding the stock because they've been to the airport recently and they see how Clear Secure is having some success at the airport? Like, this is kind of like buying Tootsie Roll Industries before Halloween. Like, what do you think is going to happen when the TSA situation gets sorted out? Well, it's probably going to go down. So I don't understand why this market is purely narrative driven. This stock is up 50% ever since we've had news of very, very, very long lines at airports, and a lot of people signing up for Clear Secure at airports. But you know what? I don't want to chase. I'm not sure I want to chase. Plus, fundamentally, if you analyze a company like Clear Secure, like as soon as TSA gets back to normal, fundamentally, a lot of these things like Clear Secure and TSA Pre, they are becoming less appealing. And don't remember, TSA removed the mandatory shoe removal when you go through the airport now. So maybe I don't fly enough to get it. I don't know. But to me, nothing explains this sharp rise when everything else is dirt cheap in the market. To me, nothing explains that. But the narrative, sure, they're going to get a whole bunch of new signups. But are they going to lose all these signups once the market gets back to normal, once airports gets back to normal? And I would argue probably. So I'm not interested in any stock in this sector. I find it way too expensive, and there's a handful of hyperscalers that are cheaper than any of these. So I don't get the sector. That's okay. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.